The second IMF IOSCO conference on market-based finance in Washington, D.C. is drawing attention of global financial regulators, policymakers, and industry leaders who are discussing the rapidly evolving landscape of the capital markets. The conference focuses on two transformative trends: the integration of artificial intelligence in financial markets and accelerating shift from traditional mutual funds to exchange-traded funds, that's the ETFs. Key sessions at the meeting examine how artificial intelligence is reshaping market dynamics, from trading strategies to risk management, raising both opportunities and regulatory challenges. Notable speakers there include acting U.S. Securities and Exchange Commission Chair Mark Uder and IMF Financial Counselor Tobias Adrian. They're engaged in discussions about safeguarding market integrity amid technological innovation. The conference underscores the need for international cooperation to ensure that market-based finance continues to support economic growth while maintaining resilience in the face of new risks. So it's day 2 of the IMF World Bank spring meetings in Washington. That is what happened yesterday. Of course, we have a correspondent there, Sarah Chimogo, who sent in that and is on standby to keep giving us updates of what's going on there in Washington. But we know Nigeria obviously is actively participating in the meetings. The CBN governor is there, the Minister of Finance and Coordinating Minister of the Economy is there. The G24 also, I believe they have their meeting later on today or tomorrow. These are areas that concern Nigeria. And we know from the speeches, the curtain raiser that we saw from both IMF and the World Bank, issues around the tariff, the threats to global economic activities and growth are top on the list. But where does Nigeria come in? What should be the focus for Nigeria? We have development economist Professor Ken Ife joining us to have this conversation. Professor Ife, good morning and welcome to the program.
Oh, thank you for having me. Thank you.
Yeah, so sometimes, it does seem as if we know that the World Bank president, Mr. Ijebanga, his own curtain raiser focused on developing and emerging economies. But sometimes it does seem like the voices of emerging economies, which Nigeria belongs to, is lost amidst global conversations, especially at a time like this when it seems the battle is really between the United States and China, and other countries are just feeling the consequences of it.
Yeah, I'm glad you put your finger on the trigger. You see, look, 4 things, for 4 years, Trump has been out of action. He was looking at 4 things he was going to do. And this is in the order of immediacy. 1, can he avert a 3rd World War? 2, I am going to start a global trade war. 3, I will move from there to a China-US economic war. And then finally, I will focus on currency war. Those are his those are his plans. And I tell you that why this is overshadowing the World Bank IMF meeting is because of the ramifications of what he is doing on fiscal policy, monetary policy, trade policy, industrial policy, employment policies all over the world, and then also, of course, growth policy. So all of the macroeconomic parameters, none of them is spared. They're all affected by what is going on. And I mean, Nigeria will always say, but, we are going to have 14%. Forget about 14% for now. We have an import-dependent economy, and that is already hostage. So everything happening anywhere globally is hitting you simply because your economy is import-dependent. But I tell you something, one good news, to be honest with you, it's always bad news all over. But one good news is that Nigerian team are there in very high spirit, led by the Minister for the Finance and the Governor of the Central Bank. They are there in very high spirit because 4 major things have ticked excellence to what they are doing. I mean, I can tell about the Fitch rating. The Fitch rating has improved, and they are saying, well done, but you could do more. Then we have the JP Morgan that has revised our default rating, currency rating to positive, B stable, which is good. And then also warns that even though all the macroeconomic parameters that are convergent are pointing in the right direction, we should not forget that the trade balances and, of course, the balance of payment is going to come under assault, and it's happening. Then also you have the PwC's PricewaterhouseCoopers one, which is really brilliant because they went to town on strategy and analysis, and then looked at matrices, 4x5 matrix of looking at impact on fiscal policy, current, all of that, beautiful analysis, but also comes to the conclusion that we are not out of the woods. We are actually just going to see the whole thing unfold. Immigration policy would affect Nigeria because it will also affect our remittances coming in. And then they pointed out all the other areas. If America pushes out more oil, we're going to be affected. Already, we are even being affected before they start pushing out more oil, because the oil price has gone down from benchmark of 75 to 60 and somewhere around there. And then you have the oil target dropping from 2.2 billion to 2 million barrels a day. We are doing about 1.45. So already I calculated the impact, fiscal impact. It showed about 36% on government revenue from oil. And then the worst case scenario came to about 65%. So all of those are all of these issues are going to be, we have to grapple with all of those. But so they are going there confident that they have done a great job, but also aware that there are still some World Bank reports saying that, well, yes, you've gained, they've removed the subsidy. There are all of those gains, but they are very, very slow in trickling down to the pot. So that's their position. But central bank in particular has never had it so good. They've had a handle now on the rates, although the potential impact from the global trade war is going to begin to have an uptick on our rate. But what we should resist as much as possible is having a regular call on our reserves to defend Naira as such. We will. Let us.
I think there's
in a holistic sense.
Go ahead, Prof.
Okay, so that's just my little advice, that when they come back from this IMF meeting, let's try and sit back, because we are having very, very difficult time coming here, and it's going to be very consequential. If you look at some of the headwinds, every global headwind will affect Nigeria, without a doubt. But who gets affected the most? Fiscal policy will take a beating, because with all that revenue drop, and then benchmark prices, they're going to have to revise all those so that we can stay within the legal limit of deficit to GDP ratio. But in terms of the monetary policy, we're going to have a lot more challenges in the sense that we have been struggling on foreign direct investment. We also need to strategize on domestic investment. Then we also have challenges now on the portfolio investment that managed to go up to 70–80% over the last 1.5 years. Now they are going to be wanting to cash because of the turbulence in the global market. And some of them are going to be scampering for safety, running back to Federal Reserves. Because, of course, America owes 34 trillion to the world. And it's even equal to the trade. Global trade is 33 trillion. America is owing 34. America owes 8.5 trillion to some countries like China, Europe, 1.5 trillion, Canada, 350 billion, Japan, 1.7 trillion, and they're taking their money out. So they owe that, but they will never pay their debt. They just print more dollars. And so what they do is that they just consume and borrow. And then wherever there's surplus anywhere, they suck it out. They borrow it. And then they're never going to repay that bill. But China manufactures and saves money, and America consumes and borrows money. So it is, the battle line is drawn between the two. But we're going to see more of it unfold, because in the end of the day, it will migrate from tariff to direct economic confrontation between America and China, and then you now have currency war coming. So all of these are coming in drips and traps. Already the Russia and China and all the BRICS, they've taken a position. They've got to walk away from dollar dominance, global dominance of dollar. And that worries everybody, because 85% of all global transactions are done in dollar. 60% of global reserves are in dollar. 60% of global debt are denominated in dollar. America has 25% of world GDP, but only 4% of world population. You can see how they are punching above their weight. They have 13.5% of global trade. But what he doesn't realize is that a lot of it is in services. If you look at the American GDP, only 18% is on industry, 10% on manufacturing. The manufacturing sector has taken a serious beating in America, and he doesn't even realize that. In 2012, when Obama and Mitt Romney were campaigning in Texas, they were all busy blaming China for all the job losses in the industry, the car industry. But forget that automation has taken a lot of those jobs, and Americans were not investing in the car industry, automation industry in America. They were doing that elsewhere. And then the demographic shift were ignored. Now you are going to sack 1.2 million cheap migrant labor, and then you think the wage labor bill is not going to increase. Of course it's going to increase. So there are all of this. And then in fact, if you think that you can muzzle, every car has at least 200 parts that are sourced all over the world, and you think you're going to force them to all come to America to manufacture the car, you're going to wait for a very long time, because it will take 4 to 10 years before it happens, by which time it would have left office anyway. But if you ever manufacture all the components in America, then nobody can afford that car. It has to be American billionaires that will afford a car that is 100% made in America.
In the midst of all of this, what conversations should Nigeria be having at the meetings? We know that, for instance, the CBN has held or hosted a high-level investors meeting with the likes of JP Morgan and all of that. Last year in October, when I was there, we had investors, a room filled with investors, where, they were being told what's going on in the country and areas and opportunities, So, I mean, what conversations that would be productive should Nigeria be having at the spring meeting at this time, amidst all of this, amidst the need for FDIs and all?
Yeah, they have to continue. Those agenda of continuing to massage the ego of the big boys, foreign investors, that has to continue. And then, of course, there are also African agenda, and Nigeria is a major part of that African agenda, that are looking at the debt situation. 19 African countries are melting down under the yoke of extreme debt. Then also you have the issue of people asking for IMF on to SDR, special drawing rights. So to be able to use, bring out special drawing rights and then channel it to development finance and financial institutions for concessionary kind of lending. We remember when it was used during the COVID, it was actually to help people purchase the vaccines and then also pay their debts and restructure their debts, all of that kind of stuff. So that's where they are looking to funnel that, if they agree to do that. And I think they need to, because we are yet to see the full impact of the global trade war. Their next meeting may take another 6 months. By that time, it probably would have been very late. Then you've got also the issues around climate change, that we're only getting 5.5% of funding available in climate change, when we are, as a continent, losing $7 to $15 billion every year on that. And we take the greatest hit from that. So all of these agendas, Nigeria are part of those. So we'll continue to talk. But I have to tell you something. If we have 2 ministers in the trade, industry, and investment, I think the senior minister should continue to talk and work with the others on global financial things and all of that. Let the junior minister go and face African countries. Go around, we have 52 weeks in a year. 53 African, go to each African country once a week, carry your businessmen, carry your chamber of commerce and man people, go and visit them and get them to come and visit us. When they come and when their businesses come here, take them to the industrial parks, go and talk partnership with these people and take it seriously, because our future doesn't lie in messing about with trade and all that stuff and waiting to react or don't react about what Don is doing. Our future lies in look inwards, identify the strength we have, find who is manufacturing and coping with infrastructure challenge, and then build strong ecosystem around that. Look for the African countries you can push products to. Look at the ones that can come in as partners. That is where you're going to focus the energy. So that's why I'm not mincing words. Let the junior minister go and face that and talk Africa all over the place and not go into all this, all that. Go now, that the time is running out. And if you want me to give you an example of what I think we should be doing, is find those manufacturing outfits, because our problem is value addition. That's why we are still import dependent. Find who has succeeded and overcome infrastructure challenge, and then build a cluster and ecosystem around that company that has succeeded. To give you an example, Dangote put $20 billion in Lekki. Lekki is a free trade zone. Why don't you get the minister and get all the gladiators and have MSMEs surround them in that area and work for $50 billion ecosystem, and they will take off because you got the infrastructure. If he has 500 megawatts of power, marginal cost of producing extra 200 is very little. So you can get traction. If you go to Texas only gets 20 the reserve of is 20 billion barrels of Nigeria has 37.5 billion barrels. They have 32 refineries in Texas. They have almost 5,000 petrochemical industries of one form or the other, all in there. That is the vision that should be facing that Lekki, because you have a hegemon right in the middle of them that are dropped 20 billion. Get all our people around. Some will come upstream, some will come midstream, some will come downstream, so that you can have vibrant industries doing something and not talking. There's no time to talk. If they want to talk, let them talk. But the CBN is actually doing its best, and then it will find their level in a strategy of that nature. Because all you say to CBN, resolve the finances, access to finance and all the fund flow in that clause. And they will do that. They're already doing something significant.
All right, Prof, thank you so much for that. We hope both ministers are hearing you and they will take what part they think is important. Because, I mean, as you said, the obvious thing now is that Africa has to look inwards. Arrangement of it, I guess, depends on both ministers. So thank you so much, Professor Kenife, a development economist, for your views this morning.
Thank you for having me.